Hi traders, this is Gomathi Shankar. I am very happy to meet you all in a new video. In this video, we are going to discuss about option selling for beginners. Last week when I attended face-to-face trading conclave, most of the traders were option sellers. And many people were asking about this option selling to me. So this video is especially for beginners. So without any further delay, let's get started. Now, recent times, these option selling strategies are very much trending among the retail traders. Especially if you look at this short straddle, most of the people were trying different time frames of short straddle and different stop loss limits. They have been trying and back testing and they have been implementing it in live markets. So nowadays, this option selling has become very much viral and trending. Long back in 2017 and 18, most of the traders will be option buyers. But fast forward after COVID, we can see a lot of people entered into options market and they have been trying to do option selling because of the lot of tools available in the markets. A lot of option strategy tools are available in the markets, and these tools have made option selling very simple, and most of the people are able to do that in a easy manner. Now, how beginners can do option selling? Most of the beginners, what they do, they directly jump into naked option selling in most of the cases, or they are trying this unlimited risk strategies like short straddle or short strangle. Most of the beginners which I have gone through, they are having less than 1 year experience. They don't even have a proper knowledge about technical analysis. They don't even know how to place orders itself. But they try to enter into the derivatives market. So beginners, those who are having less experience in the market and those who are not having enough knowledge about basics of technical analysis and order placements, please don't try option selling. Alright. So even if you are having a little amount of experience and knowledge about the market, please don't try unlimited risk strategies initially. Okay. We can see people doing straddle and strangle, even naked option selling they are going for intraday. So these are unlimited risk, and for beginners this is not recommended. Even you can see a lot of experienced traders, they will be doing risk defined strategies, and very rarely they do unlimited risk strategies. And that also it depends on the trader's experience and the risk appetite. Whereas for a beginner, it is not recommended initially. So a beginner can try out this risk defined strategies. Now let me show you in the chart. This is Nifty daily chart, and we can see over here Nifty is trying to bounce from an important support level around 16,900. Now let's say a beginner will try to sell put option in a naked manner. Let me go to monthly expiry and let me sell the 16,900 put. So this is what most of the beginners they try to do. Beginners will be selling a naked put option and they will be looking at the profit in terms of number 3,600. Out of a capital of 75,000, they are able to make 3,600. So this is how a beginner calculates. And even a lot of beginners, they calculate like, if I am placing 10 lots and I need somewhere around 7 lakh rupee and I can easily make 36,000 profit in a single day. So this is how people are calculating their profits as a beginner. But always remember, you should calculate your profits in terms of percentage, not in terms of number. So in this trade with a capital of 75k, you are able to make a 5% returns. All right. Now, the risk is unlimited when you sell a naked put option. Most of the experienced traders, they never sell naked options. But most of the beginners, they are doing it without understanding any risk involved in it. Now, many people, they used to say that 70% of the time the market is range bound, the market is not trending. Only 30% of the time the market is trending. But remember, looking at that particular data, if you are doing any naked option selling, 70% of the time you will be making a lot of money, but this 30% of the time when the market is trending, it will wipe out all the profits taken in the 70% of the trades and even more. All right. Now let's say you are making this 3,600 in 10 trades, you will be making around 36,000. Whereas in a single losing trade, if the market gives unusual gap down, we have seen a lot of gap down markets during this US and China trade war, and during this Russia and Ukraine war, and during this US election, and during this COVID time, lot of gap down markets happened. So in those kind of situations, what happens? The market gives a huge gap down and you will be incurring more than 40,000 losses in a single trade. So if you face these kind of losses in 3-4 trades, then your loss would be bigger than the profits made in 10 trades. All right. So naked option selling is always a bad idea, especially for beginners. And as I said earlier, even experienced traders, they never sell naked options. Very rarely they do, and that too with a very limited amount of capital. All right. So a beginner should try a basic credit and debit strategies. Now let's say, for example, you are having a bullish bias and you know that the market will not go below 16,900. Then what you can do is you can do bullish strategies like bull call spread or bull put spread. Basically, this bull call spread should be taken when you have a strong bullish identification in the market. Now, let's say you are aggressively bullish in the market. Let's say you are analyzing the market and the market is strongly bullish. Then you can deploy this bull call spread. And let's say if you are having a mild bullish trend, not so much trending, only mild bullish trend, then you can go for this bear bull put spread. All right. So this is the difference between these two strategies. Now, when will the market have a strong bullish trend? Whenever an important resistance level is broken, or whenever all-time high is broken, or whenever a tight range is broken, there will be a good trending market. There will be a lot of momentum. In that case, you can deploy this strong bullish strategy, bull call spread. Now, whereas when you are expecting the market to have a mild bullish trend, let's say the market is traveling from support towards resistance. All right. Let's say the market is trading inside a range, inside the resistance and support level. So in these kind of mean reversions, or in these kind of mild bullish trend opportunities, you can deploy this bull put spread. All right. So this is the difference between these two strategies. And you can clearly see in these strategies, your risk is also very limited rather than selling a naked option. In a naked option, there are possibilities of unlimited risk. But when it comes to this risk defined strategies, you make some good money as well as you lose a little amount of money. Now the funds needed for this trade is just 30k, and out of which you can easily make 10%, and you will lose only 25% in the worst case scenario, and you are not going to lose more than that. All right. And same for this bull call spread. If you are deploying bull call spread, then in worst case scenario, you are going to lose only 3,800, which is somewhere around 17%, and you will be making 6,000 rupees profit, which is somewhere around 27%. And the capital required also will be very less, 23,000 only. So this is how a beginner should approach the option selling. Okay, you should start with a credit strategy and a debit strategy, and based on your experience, you have to go on towards the advanced risk undefined strategies. All right, and even when you deploy this credit and debit strategies initially, you please don't focus on any adjustments. All right, initially you focus on booking your profits and booking your losses in credit and debit strategies, and then slowly you can switch on to adjustments, because when it comes to adjustments, it definitely requires some higher capital. All right, because in some cases we will be doing some aggressive adjustments instead of soft adjustments. We will go for some hard adjustments. In that case, you will need some higher capital. So as a beginner, when you are approaching option selling, please be clear that I am going to do only risk defined strategies, and in that risk defined strategies I am going to focus only on profit booking initially without any adjustments. That will give you the confidence and understanding about the strategy, and then you can slowly move on to the adjustments part. So this is how you master a specific strategy. Once you have mastered this credit and debit spreads, you can apply it in any instrument and it is going to be easy for you to trade. Alright, instead of going for naked option selling and instead of having a sleepless nights, it's better to have a risk defined strategy and have a peaceful night. Alright, and then based on your experience and then based on building your capital, based on your risk appetite, you can try this straddle, strangle, you can try calendar spreads, everything, all the advanced strategies whichever is there in the market, you can try it out. Now even if you have a range bound view in market, now let's say Nifty is going to trade inside this swing high and low as per daily chart, then you can deploy a non-directional strategy like iron butterfly or iron condor. Even both iron butterfly and iron condor strategies will have a risk defined approach. So let's say if you are taking an iron condor, your loss is very less, your loss is going to be minimal, especially when you take a iron condor in the monthly expiry. So especially when you take a iron condor in a monthly expiry, you will have a good risk reward ratio. So this is basically a iron condor. Let me take it for Nifty. So this is iron condor for Nifty. So and I applied this iron condor in monthly expiry. All right. So you can see that the capital required is somewhere around close to 55k, and my risk is 11%. So the capital deployed for this strategy is somewhere around 55k, and my maximum loss is 4,000, just 7%, and I am able to make 11%, 5,900, close to 6,000 rupee. All right. So this is how you approach option selling as a beginner. So in order to deploy bullish strategies or bearish strategies or neutral strategies, first you need to know what is the trend in the market, and that's why the basic stuffs like support, resistance, candlestick patterns and basic analyzing market is much needed. Rather than directly going and applying the strategy, it's better you have some view in the market and take your trade accordingly. So this will help you to a greater extent to adjust your strategies accordingly. All right. So this is how a beginner should approach option selling. Instead of going to unlimited risk strategies, please start on with risk defined strategies so that you can understand the pros and cons of option selling, and then slowly you can move on to the unlimited risk strategies. Alright guys, so I hope you all liked this video. If you have any queries, please post it in the comment section. Thank you all. Together we grow as a price action trading community. Bye.